Good morning, esteemed members. Apologies for delay. Speaker was supposed to come from outstation. Extremely sorry about that. Once again, good morning to one and all present here. We have gathered here for one day's workshop on cooperative society audit. And to dwell upon, we have three speakers. Now, may I request CA DVIS chairperson to escort speakers onto the dais and welcome them with the floral bouquet. Thank you, ma'am. Thank you, sir. Can I request the chairperson to give a welcome address and the program board?
A very pleasant morning to all the esteemed members present here, speakers of today's program, managing committee members, ladies and gentlemen. Hearty welcome to each one of you for a workshop on cooperative society audit. Most of you would have got appointed as an auditor of cooperative societies by registers of cooperative societies. So we have conducted today's program for the benefit of all the members who are doing cooperative societies audit so that they get latest updates from eminent speakers in today's program. So we have bifurcated today's program into 4 important sessions. Discussion on income tax as applicable to cooperative societies, recent changes in audit of cooperative societies, GST as applicable to cooperative societies, detection and reporting of frauds in cooperative societies, CA perspective. First time we are having discussion on this topic in Bangalore branch. Special thanks to all the speakers for giving very good topics for today's program and also being part of today's program in spite of the hectic schedule. CA Prakash Hegde sir, CA BB Ravindranath sir, he has come from Sagar, and also CA Anil Bharadwaj sir. Thank you sir for all of you for spending your valuable time for Bangalore branch programs. And with this small note, and before proceeding, I would like to make a small announcement. We have one-day workshop on RERA on 3rd of June 2023, and also we have breakfast meeting on 10th of June. We have International Yoga Day on 21st of June, and 2 days conference on recent updates on Companies Act on 23rd June and 24th June. With these programs, I request all of you to kindly take participate in it. Thank you. Over to you.
Thank you, ma'am. Thank you for that overview. Now, I have privilege in introducing today's speaker, CA Prakash Hegde. Prakash graduated in Commerce, BCom, and he is also a law graduate from Karnataka University. He is a fellow member of the Institute of Chartered Accountants of India. He is also Masters in Business Administration in Finance. He was university topper both in BCom, second rank, and LLB, first rank. Prakash initially worked as an advocate and then with the Todgar's Cooperative Sales Societies Limited, Chelsea, as its Chief Executive Officer for about 5 years, besides his practice as a chartered accountant. Later, he worked with PricewaterhouseCoopers, Bangalore for about 10 years in the field of international taxation and corporate taxation. Subsequently, he worked as a director with Deloitte Haskins & Sells India, specializing in international taxation. Now, he is into CA practice. Prakash has advised he has conducted many seminars and sessions to clients and co-professionals. Many articles authored by him on income tax are published in various national newspapers and professional journals. He has argued several important income tax cases before the tax authority and income tax tribunals. With this brief introduction, I present before you CA Prakash Hegde sir. Now we would like to inaugurate the workshop by lighting the lamp. I request all the speakers to come onto the dais. I also request CA Ravindranath Kore to come onto the dais for lighting the lamp. And also managing committee members, please. request all the members to rise for water song.
यशस्सुप्तेषु जाग्रति यशस्सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तदेव शुक्रं तदेवामृतमुच्यते अस्मिन् लोकः अस्मिन् लोषः सर्वे तदूनात्यभिकश्चन एतद्वैता 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 एतद्वैता
Thank you, dignitaries. Now, I call upon CA Prakash Hegde, sir.
Good morning, everybody. A nice Saturday morning. We have spent the day to understand some of the aspects relating to cooperative societies, taxation as well as audit. I heartily thank the chairman of Bangalore branch, the secretary, the committee of the Bangalore branch, and Ravindra sir for giving this opportunity for me to participate, interact with you and share my thoughts. For the next 1 to 1.5 hours, let us discuss what are the various aspects relating to income tax as applicable to cooperative societies. If you have any questions at any point in time, please stop me then and there. Let us address that query and go forward. Here I have the agenda for today's discussion. The first one is background, rates of income tax applicable to cooperative societies, latest amendments, types of cooperative societies, provisions of the Income Tax Act, some issues and discussion, latest legal updates, restrictions on certain cash transactions, and if you still have any more questions at the end, we will address them. Is everything visible? And am I audible? Thanks. First, let us try to understand in layman terms. Most of the general provisions applicable to any taxpayer are equally applicable to a corporate society. Most of the corporate societies and their management are under the impression that once a corporate society is set up, the corporate society is exempt from most of the laws. Particularly, they think that the income tax provisions, income tax laws are not at all applicable to the corporate societies. That is the first understanding what they have. We need to clarify that all the provisions of income tax law are applicable to any corporate society. The only difference is, subject to certain conditions, certain deductions are available in the case of a corporate society. Otherwise, all provisions are equally applicable. Of course, there are some specific provisions which are applicable to a corporate society. We will deal with that in a while. Rates of income tax. Unlike in the case of a corporate or in the case of individuals, there is a different slab given for a corporate society. You can have a look at that. Up to first 10,000 rupees of taxable income, the applicable tax rate is 10%. From 10 to 20,000, it is 20%. Exceeding 20%, it's 30%. Exceeding 20,000 rupees, it's 30%. If the total income is more than 1 crore, up to 10 crore, surcharge at the rate of 7% is applicable. And if the total income is more than 10 crore, surcharge rate will be 12% of the tax amount, and cess will be anyway additional. There is a special rate of tax under section 115 BAD, which is applicable from the assessment year 21-22, subject to certain conditions. Let us have a look at the provisions of this particular section 115 BAD. As you have seen, if the total income is more than 20,000, a tax rate of 30% is applicable. We have seen in the previous slide. But if certain conditions are fulfilled, then the applicable rate of tax will be 22% plus surcharge at 10% plus education cess at 4%. Effectively, the tax rate will be 25.17% in the case of a cooperative society which foregoes ATP deduction. Why a society has to forego ATP deduction? Only when it is unable to fulfill some of the conditions, or when that cooperative society is a cooperative bank. So I can say that for cooperative banks, you can apply the tax rate of 25.17% applying these provisions. If a cooperative society wants to go for this lower rate of tax, then it has to file the tax return under section 139(1). Also, before the due date given under section 139(1), it has to file a specific declaration in a particular form called Form 10IF. And also, once this option of going for a lower rate of tax is opted, the society cannot switch back to 30% regime, or it cannot go back to claim of deduction under section ATP. So before going for this lower rate, be cautious. Once chosen, you cannot go back. Do you have the printouts of the slides? Fine. Now, most of us have seen that in the budget which was presented in February 2023, certain changes have been brought in which are applicable to cooperative societies. These amendments, let us go through one by one. The first amendment is, it is an insertion of a section called Section 115 BAE. This is applicable in the case of a cooperative society which is engaged in the manufacture or production of certain articles, or it may be engaged in the manufacture of computer software. Engaged in certain production or manufacture. I will specify which are all allowed and which are not allowed in the subsequent slide. But the condition is it should be a new cooperative society. That means the society should have been registered on or after 1st April 2023, and it should have started manufacturer production before 31st March 2024. Within this 1 year, the company should have not only be started, but it should have started manufacture and production as well. In such a case, the reduced rate of 15% plus 10% surcharge and cess. So effectively, this is going to be a very discounted tax rate of approximately 17% on the net taxable total income in the case of a new cooperative society. For income other than manufacturing or production, tax rate shall be 22% plus surcharge and cess. And for other income, it will be 30% depending on which category a society falls into. Say if you can bring it under 115 BAD, it will be 22%, otherwise it will be 30%. Manufacture or production shall not include development of computer software, mining, conversion of marble blocks into slabs, bottling of gas into cylinder, printing of books, production of films, etc. So excluding these, if the society is engaged in manufacture or production of any other thing and subject to other conditions, the society will be eligible for a lower rate of 15% plus surcharge and cess. The other amendment which has been brought in the Finance Act in 2023 is relating to some sugar manufacturing cooperative societies, and this pertains to a period prior to assessment year 2015-16, that means financial year 14-15. Only for certain category of societies, if the society has paid the purchase price for sugar cane, which is higher than the rate which has been fixed by the government, to reduce the litigation, the deduction has been allowed by making an amendment to Section 155. Perhaps this is not applicable for most of the societies here. This is applicable for certain particular region and given with some political motive. They are calling it as to bring down the litigation, but the purpose appears to be entirely different. Anyway, to that extent, those societies are getting the benefit.
So if there is the manufacturing as well as trading, how profit is to be arrived? Is there any separate books of account is to be maintained or not?
Ideally, you are supposed to maintain separate books of account for each of the activities, and it has to be properly segregated. There are certain situations where the segregation of the expenses can be done. Say for example, if you have one secretary or one accountant for that purpose, you may have to divide it based on certain criteria. It could be based on the quantum of production. In some cases, that bifurcation is done on the basis of the turnover of the society. But where the separate books of accounts are not maintained, the assessing officers usually question that, because many of the societies and of course many of the taxpayers have the tendency to show higher expenses where taxes are payable and lower expenses where exemption or deduction is available. So you need to be maintaining it in such a way that you should be able to convince the assessing officer.
Can we opt for turnover ratio for profit?
Yes, it would be possible, but to the extent possible, try to identify the people, resources engaged for a particular purpose, say taxable, non-taxable. You should identify to the extent possible. Where it is not possible, or for example, for the whole society there is only one employee and the society is carrying on both the types of activities, you cannot segregate. In such a situation, perhaps you can go by the turnover ratio. The other amendment which has been brought in is with regard to TDS rate applicable under Section 194N. 194N has been brought into force about 3 years ago. In respect of cooperative societies, wherever that particular section refers to 1 crore rupees, the amount has been enhanced to 3 crore rupees. And this particular, the relaxation is applicable for all types of cooperative societies. The last amendment which has been brought in Finance Bill 2023 is with regard to relaxation under section 269 SS and 269 T. Let us have a look at that. And this relaxation is applicable only for primary agricultural credit cooperative societies and primary cooperative agricultural and rural development banks. It is not applicable for any other category of societies. It is not applicable for, say, credit cooperative societies or marketing societies or, say, any other types of housing society, whatever. It's applicable exclusively for these two types of societies. And for these societies, acceptance of deposits is permissible even if the deposit is received in cash up to a limit of 2 lakh. You know that the amount which is given as a limit in section 269 is 20,000 rupees. And in these two categories of societies, instead of 20,000, it has been relaxed to 2 lakh rupees. Similarly, in the case of repayment of deposits, instead of 20,000, the amount has been enhanced to 2 lakh rupees. And also, for the members of these two categories of societies, that's PSCs and PCARDs, if the members have borrowed the loan otherwise than through specified mode, let's say otherwise than through account pay check, otherwise than through account pay demand draft, or otherwise than through NEFT, in specific words I can say, if somebody has received loan from a cooperative society, primary agricultural society or PCARD, then even if the loan is received in cash up to an amount of 2 lakh, he will not be hit by 269 SS. So instead of 20,000, it has been enhanced to 2 lakh rupees.
They deposit into the SP account, sir.
Sorry?
They deposit into the SP account and make as FD.
That will still be treated as acceptance of cash deposits. Yes, even if it is accepted to SBI and transferred, still savings bank receipt itself will be treated as a deposit. Yeah. In section 269 SS and 269 T, a reference has been made to deposits, loans and specified sum. And this relaxation of 2 lakh is not applicable for specified sum. What is specified sum has been defined in section 269 SS. Specified sum refers to any type of amount of advance or amount received in relation to transfer of an immovable property. So for that the limit remains at 20,000 and it is not enhanced to 2 lakh rupees. You have any questions so far? These are the amendments made by the Finance Act 2023 which are specifically applicable to cooperative societies.
In tax, they are opening account, SBI account. That is also treated as same cash disbursement.
Yes, for the purpose of cooperative societies, definitely it will be treated as
Primary agriculture society.
yes.
And they are routing through DCC bank account.
See, ideally, to avoid 269 SS, in case the cash receipt or cash deposit is going to be more than 2 lakh in case of primary agricultural cooperative societies, they have to make sure that the members deposit the amount in banks and from the banks it gets transferred to the societies. If they directly accept, whether you call it as fixed deposit, savings deposit, current deposit, or say a current account, or it could be pigmy, in whatever form, 269 SS will get breached and penalty could be levied. And many of the credit cooperative societies are not aware of that, and even if they are aware of it, they want to continue with the practice. And in case the tax authorities take up that, there could be a huge amount of penalty. Common types of cooperative societies. Of course, in the Income Tax Act, there is no reference to the types of cooperative societies except, as I mentioned, primary agricultural societies or PCARD. They have not categorized the societies into different types. But for the purpose of our understanding and for the purpose of our further discussion, I thought it may be helpful to discuss what are the types of cooperative societies with which we regularly deal. By registration, we can categorize the societies into 3 types as far as Karnataka jurisdiction is concerned. The first type of societies are which are registered under the Central Cooperative Societies Act. The next one is Karnataka Cooperative Societies Act, and the third category is Karnataka Savarga Sahakari Act. By function, you may categorize the societies into primary agricultural credit cooperative societies, agricultural and rural development banks, credit cooperative societies, marketing cooperative societies, multi-purpose cooperative societies, banking cooperative societies, housing cooperative societies, milk cooperative societies, or there could be labor cooperative societies, fishing cooperative societies, several other types of cooperative societies are also there. Now, let us have a look at the various provisions of the Income Tax Act which are specific to cooperative societies. One of the important amendments which has been brought into force in section 80 AC with effect from 2018-19 is seriously affecting the cooperative societies. How is it affecting? This amendment says that no deduction under section 80H to 80TT is available unless return of income is filed within due date specified under section 139(1). What is the due date under section 139(1)? Usually, in the case of a cooperative society, 31st October. If a society wants to claim ATP deduction, it has to file the income tax return by 31st October each year, after the end of the financial year. If it fails to do so, then ATP deduction is not available. This is the amendment which has been brought in from assessment year 18-19.
Sir, one society which is not having tax audit filed the return within October 31st. CPC taking 31st August as the due date disallowed the ATP deductions. And then that was we mentioned, reported that one to CPC, they transferred it to assessing officer.
Okay.
There we physically gave the letter enclosing the tax audit report and all those materials, balance sheet, everything they gave. They also rejected. Due is there now.
Okay. One possibility is in the income tax return while filling up, there is one column you need to mention that the society is subject to audit under the Karnataka Cooperative Societies Act. We have seen many cooperative societies filing the return without specifying that it is subject to audit. It is not just the tax audit that you need to mention there. You also need to mention whether the society is subject to audit under the Karnataka Cooperative Societies Act. That could be the error, one possibility. Now the way forward is you have to go in and appeal. Alternatively, you can go in for a revision under section 264 before the commissioner.
Now the time is already over. Now it is for the assessment year 18-19.
Okay.
Last year only we filed no information. Now we physically wrote the letter about the mistakes. They have not allowed and they have not responded also.
You can go in appeal.
One more time we will give the letter today's date and we can appeal.
Yes, you can go in appeal and seek a condonation. There is a very good explanation you can give for the condonation because you have tried your best to get it rectified and it is not resolved. So that condonation would be accepted. You have to go in appeal with condonation. Parallelly, if the commissioner is good and say assessor friendly, you can consider revision also. But revision and appeal cannot go together. You can parallelly try for revision. And even for revision, there is a time limit of 1 year, but you can file with a condonation.
So return is filed within due date, but Form 10B is filed, is also filed on 31st October. Still they are rejected.
Form?
Form 10B. Audit report.
No, 10B is not applicable for a cooperative society. Okay.
Oh, it is a cooperative society.
Okay.
The 10B report is filed up before 139 due date.
Okay.
Still they reject. They don't allow the reduction of section.
Okay. You may have to go in appeal then. Yes. Let us have a look at the important provisions of section 80P. How does it read and what do we understand from these provisions? As per section 80P2, the whole of the profits and gains of business attributable to the following activities are deductible. Okay, let us see what are those. The first one is income generated out of carrying on the business of banking or providing credit facilities to its members. This is quite a confusing statement. Here they are saying even if a society is engaged in the activity of banking, the profit earned by that cooperative society is deductible under section 80P. But later they have brought in an amendment in section 80P4. The amendment is brought in 2007, which says that a bank, a cooperative bank, is not eligible for deduction under section 80P. So here, since this particular language is continued, many of the officers, many of the authorities are getting confused because whether a society can carry on a banking activity, still get the 80P deduction when there is a specific bar under section 80P4. Perhaps the way we have to understand is the cooperative societies carrying on the banking activity or providing the credit facility, which is loosely worded here. Because a society which has to carry on the banking activity has to get itself registered with the Reserve Bank of India, obtain a license, and then only it will be considered to have carried on the banking activity. So for the time being, I have to treat this term banking as confusing or redundant or loosely termed. The focus will be only on providing credit facilities to the members. A society which provides credit facilities, earning income, is eligible for deduction. Stress is given on the word its members. If a society is engaged in providing credit facilities and earning income by providing the facilities to people who are not members, then the deduction is not available. Deduction is available for income earned by society engaged in cottage industry, and also if it is engaged in marketing of agricultural produce grown by its members. I have stressed on certain words here. It should be marketing of agricultural produce grown by its members. If, for example, a member of a society purchases the produces from another person and sells it in the society, the deduction is not available to the extent of the profit earned from that particular transaction. So the societies have to ensure that the members who are selling, who are marketing the producers through the society have themselves grown. That is a very important burden which the societies have to bear.
So how to prove it whether it is grown or he has acquired from somewhere else?
It's a challenge. At the time of enrolling a member, perhaps you will have to collect the record of rights relating to the agricultural property and retain that. And every year, perhaps you have to ensure that you collect the records, or he gives a declaration that the property still continues in his name and he has grown it. That is the best evidence, because the societies cannot cross-check whether he has grown or he has purchased. But the assessing officer can question. He can ask the society to prove that it is grown by the members. Also, profit earned by society through purchase of agricultural implements, seeds, livestock or other articles intended for agriculture for the purpose of supplying them to its members. See, in most of these provisions, the stress is on members. If the transaction is with the members, then the deduction is available, except in the case of cottage industry. So, societies have to ensure that whoever deals with it has become a member if it is otherwise eligible for 80P deduction. Let us see the remaining provisions. Processing of agricultural produce of its members without the aid of power, this is also eligible for deduction. Collective disposal of labor of its members is also eligible. Fishing and allied activities, this is also eligible. So we have covered the first part, 80P2A. Now let us have a look at the second part, 80P2B. Here the profits and gains of societies earned by supplying milk, oilseeds, fruits or vegetables raised or grown by its members to a federal cooperative society or the government or a local body or a government company or corporation, etc. One of the important things that I want to stress here is, in the case of a milk cooperative society, most of you have seen that they have a sales counter right at this cooperative society. And if the cooperative society is selling it to anybody other than the members, or say other than federal cooperative society or government or local body or government company, then ATP deduction is not applicable for that cooperative society. So we have to make sure that all the conditions which have been put here in the section are fulfilled if the society has to be eligible for ATP2 deduction. The next provision is relating to section ATP2C, and please note that this is a very important provision, and we have been noticing that many of the societies are not claiming this general deduction. Whatever be the type of cooperative society, this ATP2C deduction is applicable. In the case of a consumers cooperative society, a deduction up to 1 lakh rupees available. In the case of any other cooperative society, deduction up to 50,000 rupees is available. Whatever be the nature of society, whatever be the nature of income, this general deduction is flatly available. Next important provision is section ATP2D, which gives deduction for a cooperative society for interest and dividend received from any other cooperative society.
If a cooperative society does activity with the non-members, can I claim ATP2C?
You are allowed. In case of consumer society, 1 lakh, because consumer society obviously do not deal with the members, it will deal with the public also. And in the case of any other society, 50,000. It's a general deduction. We will have a detailed discussion a while after with regard to deduction at section ATP2D. There are quite a few points to be discussed. The next one is the income earned by letting out warehouses, that is also deductible under section ATP2E.
Dividend from listed company, take example. Dividend from the listed company, is it exempt?
No. Only interest and dividend received
From the cooperative.
from a cooperative.
Cooperative, there are cooperative, crypto and all is there,
And that is a cooperative society. Yes, CRIPCO, IFCO.
but they are deducting TDS.
Okay. But it will be considered as deductible in the under section ATP2D, because those are also cooperative societies.
But CPC is not allowed, actually eligible. CPC is not allowed.
Yeah, once you put some interest or dividend as a deduction in the income tax return, CPC has been instructed straight away to reject all the claims, and they want people to go in appeal and fight. Section ATP3 bars double deduction. You cannot claim deduction under some other section as well as under ATP. This is not allowed. Section ATP4 refers to the non-deduction or restricted deductions for a cooperative bank. Any questions on ATP? Of course, some of these questions we are going to address at a later point,
We are
but
discussing the D, right?
yes, we have that.
Society is accepting a pygmy, sir. Those are non-members. For the non-members, they are accepting a pygmy. Because of this reason, 1 or 2 members are non-member. Because of this reason, whether society is losing a ATP to sir?
What type of society is that? It would be a credit cooperative society. Credit cooperative society dealing with non-members will lose the deduction. Ideally, it should lose the proportionate deduction, but it would be difficult to identify the profit earned out of the transaction. that is a separate debate, but proportionate deduction would be disallowed.
So some cooperative, primary agricultural cooperative societies are selling public distribution system, ration system.
Fully taxable. Yes. PDS distribution, that will be fully taxable because it doesn't get covered under section 80P. Some of the societies are still claiming deduction and enjoying it. As long as they are not scrutinized, they will continue to enjoy.
Some of the cooperatives are making as a nominal member.
Yeah.
So if the business is nominal member is allowed as a deduction or they are considered?
I have a discussion on that. I have a discussion. Section 194A refers to TDS on interest. And in the case of a cooperative society which is not a bank, and if the interest is paid to a member, TDS is not required. But an amendment has been brought in 4 or 5 years ago which says that depending on the total sales or turnover of the society, even in the case of the payment of interest to a member, TDS would be required. What is that? If the total sales, gross receipts or the turnover of that society is more than 50 crore in the earlier financial year, and if the amount of interest payable to the member exceeds 40,000 for the financial year, TDS at 10% has to be made. This 40% amount will get changed to 50% in the case of senior citizens.
What is the definition of turnover?
You have to go by the definition given in ICA guidance note for tax audit.
The TDS officer is telling that this work capital, whatever they receive, in the total of the receipts and payment account, that is to be considered and not profit and loss account.
No, turnover is not defined in the Income Tax Act.
Yeah.
For the purpose of definition of turnover, whether for the purpose of section 44 AB or AD, we are supposed to refer to the ICA guidance note. ICA guidance note on tax audit has defined how a turnover has to be identified and calculated. We have to go by that, and there are quite a few judgments of the tribunals also which have accepted that view, and we go by that. And just totaling of the receipt and payment account or balance sheet will not give the turnover amount.
Yeah, that is the contention of the TDS officers. They are issuing notices now. They have conducted surveys and they are issuing the notices.
Okay. That would not be entertained by the higher authorities. Section 194(1) refers to TDS on payment of cash. We have discussed that the amount or the limit of 1 crore has been enhanced to 3 crore. I just read out. When a bank or a post office has to pay cash in excess of rupees 3 crore during the financial year, TDS should be done at 2% of the amount exceeding 3 crore. In the case of Primary Agricultural Cooperative Society or PCRD Bank. For other societies, it remains at 1 crore. Where the recipient has not filed tax returns for past 3 years cumulatively, TDS at 2% has to be made when payment exceeds 20 lakh and at 5% when payment exceeds 3 crores.
Just 3 years includes cumulative or even in the middle of the year?
No, cumulatively 3 years.
All the 3 years?
Yes, all the 3
If
years.
they file for, they should have filed. If they are not filed even for 1 year, this 20 lakhs will have paid.
No, only when they have not filed for all the 3 years, this higher limit will get triggered.
Higher will be applicable, otherwise 20 lakhs will be there.
Yes, 20 lakhs will be there. And in any case, we go by the module what they have given in the income tax portal, which where you can put in the PAN and find out which rate of TDS will be applicable. We have been blindly using that, and that is to be treated as sacrosanct, and you cannot question that. It's cumulatively 3 years. What are the important issues? Let us have a look at that. What are the litigation points? What are the questions which the assessing officers have been raising in the recent past? I have listed down about 10 issues here. The first one is Savartha Cooperative, interest received from commercial banks. Third one, interest received from cooperative banks. Fourth one, nominal members. Fifth one, associate members. Sixth one, filing the return by due date. Seventh one, deduction for expenses under section 57. Next one, mutuality. Next, unexplained cash credit, etc. Last one, demonetization deposits. These are the 10 issues what we have identified. First one, Sauharda Cooperative. A few years ago, the Sauharda Sahakari Act has been brought in. Interestingly, Sauharda Sahakari Act does not use the word cooperative. It does not use the word society. It uses the word cooperative. In the Income Tax Act, Section 2 defines a cooperative society for the purpose of the income tax law. There, they use the word cooperative society. The question before the Income Tax Tribunal in Bangalore was whether Sauharda Cooperative is a cooperative society or not. When it does not use the word society, whether deduction under Section 80P is available. That was the question in the case of Udaya Sauharda Sahakari. So this matter went into litigation, and there have been High Court decisions which are held that going by the reason why Sauharda Sahakari Act was brought into force, going by the spirit for which this law has been brought into force, cooperative, Sauharda Cooperative, even though it does not use the word society, should be considered as a society itself and deduction should be available. This decision has been rendered in the case of Swabhimani Sauharda Cooperative Society by the High Court of Karnataka. And also, the department has not ended the matter, it is still in appeal. So some of the officers still continue to dispute that Sauharda is not a society and deduction under Section 80P is not available. Perhaps the department may continue this litigation until judgment of the Supreme Court is rendered. The next point is interest received from commercial banks. Whether interest received from commercial banks is subject to deduction under Section 80P. We have just gone through the provisions of 80P. Can anybody tell whether deduction is available if interest is received from a commercial bank, which is not a cooperative bank? The view is divided. See, think of a cooperative society which is engaged in, for example, housing facilities, or think of a society which is into a labor cooperative society. For all such types of cooperative societies, if an interest is received from a commercial bank, it has to be treated as taxable, because Section 80P 2D allows deduction only for interest received from a cooperative society. So, commercial bank is not a cooperative society, deduction is not available for certain category society. Now, when deduction for commercial interest from commercial banks is also allowable, there is a type of society which uses money as its stock in trade and rotates the funds, and its business itself is to earn interest, and it transacts only with the members. Say, credit cooperative society. There, the society itself is into the transaction of giving credit, collecting money. Whenever there is a surplus, the surplus has to be deployed somewhere to earn interest and earn the income. Here, for credit cooperative societies, ideally, the deduction under Section 80P A1 itself should be available even for interest received from a commercial bank. But as far as Karnataka jurisdiction is concerned, none of the authorities are giving this deduction. There are many decisions in Delhi and as well as in Gujarat which say that in the case of cooperative credit societies, interest earned from even commercial bank is allowable. Supreme Court, in the context of Totka's cooperative society, has ruled that interest earned from banks is to be treated as income from other sources, and therefore 80P deduction is not available. Only in the context of Totka society, but the income tax officers have been applying that judgment across the board. Whether it's a marketing society, credit society or any other society, they are applying this judgment.
What is the status of the Tumkur merchants decision?
That is also in appeal before the Supreme Court, and another couple of cases of Todka societies. Department has gone. And in Todka societies matter also, there are some appeals before the Supreme Court. I'll explain that. Of course, now you have the printed material. The details and description are given there. You can go through that leisurely. I will not explain much here. You can refer to Tumkur Merchants Bank as well as Guttige Dara Credit Cooperative Society with regard to interest received from commercial banks. Now, the hottest issue is with regard to interest received from cooperative banks. We have already discussed that interest received from or dividend received from cooperative society is eligible for deduction in section 80P2D. But whether a cooperative bank is a cooperative society, that is the question raised by the income tax authorities. What do you think? Whether cooperative bank is a cooperative society or not?
It is registered primarily cooperative.
Yes. Without getting itself registered as a cooperative society, it cannot obtain the license as a cooperative bank from the Reserve Bank of India. All of us agree, right?
Yes.
Let us see what the courts say. Courts need not necessarily agree with us, right? There were two decisions of Todka Society rendered by Dharwad Divisional Bench in 2017 in the context of the same society, Todka's Cooperative Society, for the interest received from same cooperative bank, Canara District Central Cooperative Bank. First decision in the case of Todka Society was rendered in January 2017. There, the judges were of the view that cooperative bank is a cooperative society. Cooperative society is a bigger family. Within that family, cooperative bank is also included. Therefore, cooperative bank is a cooperative society. You can see that Venn diagram. Cooperative society, cooperative bank and bank. Cooperative bank is a society as well as a bank. That was the view of the divisional bench of Karnataka High Court. Just after 5 months, in June 2017, in respect of the same Todka Society for the same interest received from Canara District Central Cooperative Bank for a different assessment year, an appeal came up. And in that particular case, the judges of the divisional bench, of course the sitting judges were different, they took a view that a cooperative bank is not a cooperative society because it has been categorized as a special organization which is distinct from cooperative society, and therefore any interest which has been received from a cooperative bank is not eligible for deduction under section 80P2D. And this is the law prevailing at the moment in Karnataka. And Mumbai High Court has taken a different view. Mumbai High Court says that cooperative bank is a cooperative society. And Delhi High Court has taken a view, cooperative bank is a society. But in Karnataka, the law is different. And this is being religiously followed by almost all the authorities here. There are few divergent views, I discussed that. Any questions on this 80P2D? Now, the next issue is whether nominal members or members of the society. We have discussed that for most of the transactions, a cooperative society has to necessarily deal with the members. If the society is dealing with non-members, to that extent, 80P deduction is not available. Some of the societies have nominal members, associate members, or different other types of members. Whether the share members are the only members which a society should have to get the 80P deduction, or whether nominal members or associate members are also allowed. The Income Tax Act does not define the word members, but it says transactions with members. If it is done by society, profit earned to that extent is deductible subject to other conditions. So what is the meaning of a member? CBDT long back in 2002 issued a circular saying that a nominal member is not a member for the purpose of income tax law, and that was questioned by Jalgaon District Central Cooperative Bank before Bombay High Court, and Bombay High Court told that if the Income Tax Act does not define the word member, if the Income Tax Act does not restrict the word member to share members, how can the CBDT go beyond the language of the law which is given in Income Tax Act and say that nominal members are not members? Therefore, it struck down the circular issued by CBDT, and later, in the case of Citizens Cooperative Society, a lot of discussion happened in the judgment which is rendered by the Supreme Court in 2017, and also the term member has been very well explained by the Supreme Court in Mavilai Service Cooperative Bank, January 2021. There they have explained how a term has to be understood when it is not defined in the Income Tax Act. I'll explain that. When a member word is not defined in the Income Tax Act, we have to go and check the Cooperative Societies Act, whether the Societies Act has defined the term member. Say in the case of Karnataka Cooperative Societies Act or in the case of Karnataka Sauharda Sahakari Act, the term member has been defined. How has it defined? In Cooperative Societies Act, member means a person joining in the application for the registration of a cooperative society and a person admitted to membership after such a registration in accordance with this Act, the rules and the bylaws, and includes a nominal member and an associate member. It includes. This is the meaning as per the Cooperative Societies Act. In the case of Sauharda Sahakari Act, they have included a nominal member. See the last line. They include the term nominal member. So if a society comes under Karnataka Cooperative Societies Act and if it has nominal members and associate members, all those types of members will have the term or will fall within the term members. For Sauharda Sahakari, nominal members fall in the category of members. If a Sauharda Sahakari has associate members, they won't fall within the category of members. Clear? And this has been accepted by the Supreme Court in the case of Mavilai Cooperative Bank. Associate members. Associate members has been considered as members within the Karnataka Cooperative Societies Act. But under this Act, there is a restriction. The Societies Act has put a restriction that the total number of associate members shall not exceed 15% of the total regular membership. What will happen if the regular membership is, the associate membership is more than 15% of the regular membership? Then Bangalore Tribunal has held that ATP deduction is not at all applicable for the society. This was rendered in the case of Atma Shakti Multipurpose Cooperative Society in October 2019, and thereafter many decisions have been rendered by the tribunal here in Bangalore. Kanakadas Patina Sahakari Sangha, Parvati Parameshwar Patina Sahakari Sangha, in all these cases, associate members were higher than 15% of the total regular membership. So ATP deduction has been completely denied. In some of the cases, the matter is before the High Court of Karnataka. The next issue is filing return by due date. We discussed this, the provision under section 80 AC which has denied deduction under section 80P if the return is not filed within the given due date defined under section 139(1). What is the way forward where such deduction has been denied? The only option which would be available is to go before the commissioner or principal commissioner and seek condonation for the delay, or seeking the condonation, you will have to file the application with the due date, and you have to follow up with the concerned authorities, and if they are satisfied, then you will get the condonation. Satisfaction is more important.
That 15% restriction is given by department of Cooperative Society Act, not
Society.
the income tax.
No, not by the Income Tax Act.
Because that employee societies and all exempted. They can, more than 15% they can have.
Yes, yes. But interestingly, where associate membership is more than 15%, the ratio of Citizens Cooperative Society rendered by Supreme Court comes into play. What does Citizens Cooperative Society's judgment say? It says that where the society is running the business in contravention to the act under which it is regulated and registered, then the society should not be eligible for deduction under Section 80P. So this 15% increased percentage, whether it is the violation of the regulations of the Cooperative Societies Act, or can it be considered as a minor violation, trivial violation? That is the issue before the High Court now.
Because that cases, employees cooperative society, that 15% restriction is not there. If you go that members, only 200 or 300 regular members. There are thousands together members, associate members.
Yeah.
They are keeping the deposits and doing the business.
Yes.
That case income tax is now issuing the notice disallowing.
Okay. Okay. See, for example, if the interest received by cooperative society is not deductible under Section 80P2D for whatever reason, the alternative option you can try is with regard to deduction for cost of funds or deduction for expenses incurred by the society in earning that interest. See, a cooperative society obviously would have received deposits from several members, right? And those deposits, if they are in excess of the business requirement of the society, would have been deposited in the banks. It could be cooperative bank or nationalized bank. And if the income tax department says that interest received from a cooperative bank is not eligible for deduction under Section 80P2D, then you can always ask for the cost of funds, because these may not be the free funds of the cooperative society. These are the funds which might have been received via deposits. On the deposit, the society would be paying some interest, and whether that interest is subject to deduction. This issue came up before the Karnataka High Court, again in the case of Totadar Society, and High Court told that deduction under Section 57 is available. But practically, how will you be able to justify whether the interest earned by society is eligible for certain deduction under Section 57? See, I can understand if you have received deposit from one member, say 10 crore you have received, and that 10 crore you have collected and deposited with another bank on the same day, and you have earned interest. The interest payable for the deposit is clearly identifiable, and you can claim that it's a deduction. But in case of bigger cooperative societies, if there are hundreds or thousands of members dealing with the society, deposit the money every day in and out, and the society is depositing in turn with the cooperative bank, whether you can establish that particular deposit accepted from a member has been deposited in the bank, practically it is not possible. This is considered as a weak point as far as the societies are concerned, and the assessing officers are denying the deduction under Section 57. So to the extent possible, you should be able to justify the relationship of interest paid against interest earned. Therefore, segmental accounting and documentation have to be maintained wherever possible. Mutuality principle. Some of the experts are of the view that for a cooperative society, the principle of mutuality is available, and therefore, even if ATP deduction is not applicable, applying the mutuality principle, the whole income earned by society would be exempt. But this has been denied by many of the tax authorities, including tribunals and high courts. What is mutuality? Let us try to understand. These are the 4 conditions which have been stipulated. Identity between contributors and beneficiaries should be there. Objective of mutual benefit should be there. actual activities resulting in either mutual benefit or return of contribution to the contributor should be there, and impossibility of earning any profit from contribution made. These are the 4 conditions if you want to claim a mutuality. And ideally, only housing cooperative society can get exempted under mutuality principle. No other society will be eligible. This has been held by many of the courts. So therefore, the only option is to go for ATP deduction subject to various conditions. Sir, should we take a break now? Another 15 minutes. Okay, sure. Unexplained cash credit. In many of the society's cases, the tax officers have been making additions for whatever reasons under section 68 or 69, 69A or 69B, where the society is not able to properly establish the receipt of the amount or the deployment of the funds. In such cases, is there a relief? Here, you need to refer to the decision of Pune Tribunal in the case of Amanchote Vyapari Sahakari. What it says is, a society is engaged in a business activity. It is not into any private activity, right? So, whatever additions have to be made under section 68, 69, etc., those additions would also be eligible for deduction under section ATP. Let the officer make the additions under these sections, but the society will be eligible for deduction under section ATP, depending on ATP to A1 or it would be ATP to A3, etc. Deduction would be available. Deposit during demonetization period. From 8th of November 2016 till 30th December 2016, currency notes of 1000 rupees and 500 were demonetized. Please remember, holding or transacting those currency notes during that period was not illegal. It was not considered as a legal tender. So if somebody comes to you who has to pay you some amount, and if he offers you the amount in demonetized currency during that period, it was not a legal tender. You had an option to reject, saying that he did not offer the legal tender money and therefore I am not accepting it. But it does not mean that holding or transacting in those currency notes was illegal. This was the view of many of the tribunals, including the Bangalore Tribunal in the case of Bhagiratha Pattina Sahakar Sangha Niyamita in February 2022. So in case any of your clients have any issues pertaining to demonetization period and acceptance of cash during that period, you can rely on this decision.
Any high court judgments are considered in this case? Demonetization cases.
Sorry?
Demonetization cases, any high court judgments are?
Not yet.
Not yet.
We have quite a lot of tribunal judgments at the moment. Here we have the latest legal updates in the last 1 year applicable to Karnataka jurisdiction. As I mentioned, even though the income tax law is only one, because of some of the high court judgments, the law applicable to Karnataka is different and law applicable to other states is different. Here the first one is ITT Bangalore decision in the case of Sharavati Pattina Sahakar Sangha, August 2022. Amount added under section 40AIA for failure to deduct TDS would also be eligible for deduction under section ATP 2A1. Similar to that Pune Amanchote Vyapari decision what we discussed in the context of addition under section 68. Similar decision has been given by Bangalore Tribunal also. Second one, ITT Bangalore in the case of Amasebel Vyavasaya Seva Sahakari Sangha, August 2022. If the delay in filing of the income tax return is condoned by the Principal Commissioner of Income Tax, deduction under section ATP should be allowed. Next one, this is a Mumbai bench decision but equally applicable for Karnataka. Deduction under section ATP is not applicable where the income tax return for assessment year 18-19 has been filed beyond the due date stipulated in section 139(1). The tribunal here did not accept any alternative contention. It has denied ATP deduction. The next one is the decision of ITIT Chandigarh, which says that mere making of claim of deduction under section 80P2D, which is held to be not allowable, does not amount to furnishing of inaccurate particulars of income and thus attracting the rigors of section 271(1)(c) of the Act. Just claiming a deduction and the denial of the deduction by the income tax officer does not lead to the penalty. Fifth one, Bangalore Tribunal again, in the case of Karinje Service Cooperative Society, claim of deduction under section 80P2A1 has to be examined by the assessing officer in respect of interest on general reserve and liquid or cash reserve to be mandatorily maintained by the society. See, if a society has earned interest from general reserve fund which has been deposited, then it can be treated as income from business, because the law, the Cooperative Societies Act itself says that the societies are required to deposit the reserve fund amount with a cooperative bank, and therefore it can be categorized as an amount which is eligible for deduction under section 80P2A1. Next one, Supreme Court decision in the case of Anna Saheb Patil, recent one, May 2023. Perhaps many of you would have seen some WhatsApp messages in Kannada, in English, etc., which says that all societies are exempt under section 80P, irrespective of any claims, any disputes with the income tax office. But please go through this particular judgment, which says that a credit cooperative society is not a cooperative bank, and therefore a credit cooperative society cannot be disentitled for deduction under section 80P, applying the provisions of 80P4. That is the gist of the judgment of the Supreme Court. It does not say that all societies are eligible. Each society will be eligible subject to conditions specified under section 80P. Last one, a very interesting one. ITIT Bangalore, 18th May 2023. Last week it was rendered. What it says: assessee societies eligible for deduction under section 80P2D even in respect of interest earned from cooperative banks. Perhaps this judgment could be of help for many of our cases, but interestingly, they have analyzed the judgment of the High Court. They have not concluded how the High Court judgment is not applicable in this particular case. They have not distinguished, or they have not explained well, but they say that deduction under section 80P2 is still available. Any questions? In the context of cooperative societies, let us just quickly have a look at the important restrictions under the income tax law with regard to transactions in cash. Section 40A3, it says expenses or payments not deductible in certain circumstances, the limit is 10,000. If the expenses are more than that, deduction itself is disallowed. Payments made for hiring goods and carriages, instead of 10,000, it's 35,000. They have given in the rules, Rule 6DD, they have given the exceptions. 43(1) gives details with regard to the limit for expenditure for acquisition of any assets. If any asset is acquired by payment of cash in excess of 10,000, the amount which is paid in cash will be excluded from the cost. So no depreciation, no deduction even upon sale of the property. There is restriction up to 20,000 in the case of 269 SS, 100% penalty. But we discussed that in the case of PACs and PCRDs, instead of 20,000, 2 lakh is the limit. 269T, similar 20,000 limit. 269 ST, whatever be the nature of the assessee, if anybody receives cash in excess of or equal to 2 lakh rupees, a penalty equal to that amount would be leviable. 194N, we discussed that already. So in the case of all societies, limit has been enhanced to 3 crore. 44AB, threshold limit for tax audit increased to 10 crore if cash transactions do not exceed 5%. If this condition is violated, if the total turnover exceeds 2 crores in certain cases or 3 crores in certain other cases, the society or the assessee will be liable for tax audit. I would be happy to take up any questions you have.
The filing of this SFT transaction by 31st May, is it applicable for cooperative societies?
For cooperative societies also it is applicable. Rule 114E has given, I think, 14 types of transactions and assessments for which it would be applicable. Some of the societies which have tax audit under section 44AD, if they have received any amount in cash in excess of 2 lakh rupees, they have to file form 61A in the full format. Even otherwise, societies are required to file the preliminary responses, saying that whether that particular provision is applicable or not applicable. Of course, there is no penalty if the preliminary response is not filed, but if the detailed format is applicable and if that is not filed, there is a penalty also. I think 100 rupees per day or something. Shall we conclude this session?
With respect to High Court decision and the latest ITAT decision on the ATP reduction, what would be the High Court's decision will prevail?
High Court decision should prevail because see, High Court has categorically mentioned cooperative bank as different from a cooperative society, and taking a different view by a lower court perhaps is not acceptable. Interestingly, same Bangalore tribunal has rendered various decisions where it says that it has to go by the decision of the High Court of Karnataka, and therefore cooperative bank is not a society. But a particular bench led by a particular team of judges has taken a different view in two contexts. One is one decision what they rendered in October 2022. I think the name is Bhavasara Cooperative Society, and the second one is May 2023. These are the two exceptions, whereas there are more than a dozen decisions rendered by different benches of the same tribunal which say that the High Court judgment will prevail.
Can you give a clarity on TDS applicable to commission for picnic agents?
Yes. See, for PICMI commission, if the commission is paid, 194H would be applicable there definitely, and a PICMI commission agent will be considered as an agent of the cooperative society. The commission can be excluded where you can prove that that particular person who is collecting the PICMI amount is not an agent, but it is not possible to prove in the present type of arrangement what the societies have.
But one of the Supreme Court cases says the PICMI agent can be considered as an employee, and TDS 192 is applicable instead of 194H.
But most of the PICMI arrangements, what we have seen is, it's based on agency concept, not in the context of an employee. Say for example, if a person is a full-time PICMI agent and completely monitored and controlled by the cooperative society, then perhaps we can say that he is an employee and not an agent. But most of the PICMI agents, they are doing it as an independent activity. The same discussion goes to the employment relationship versus the contract relationship, whether you can call it as a contract or as an employment relationship. I heartily thank all of you for the patient listening and for enriching my knowledge. I also thank the Managing Committee of the Bangalore Bench for giving this opportunity. Thank you so much.
Thank you, sir. That was a knowledge enriching session by CA Prakash Hegde, sir. A round of applause once again, please. No doubt, the person who is auditing, the cooperative society will only be doing income tax returns for the society, but my suggestion, with humble this one, it give that opportunity to another chartered accountant professional who can do it independently and having a third eye view of that society in case if there are anything which need to be observed before it is submitted. With that, But ensure that IT returns are filed well within the time due date by complying all the provisions of Income Tax Act. A round of applause once again. As a token of appreciation and gratitude on behalf of members present here and all the managing committee members of Bangalore branch, I would like to hand over a memento to the speaker. Can I request CA VM Tupar, Sikasa Chairman, Bangalore branch, to come on to desk and then hand over a memento to the speaker.